Hi everyone, today let's talk about Tesla, then we'll look at seasonality, as well as the sell-off we saw across markets. Then we'll finish up with my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So we got Tesla's fourth quarter numbers, 485,000, a massive number, ending the year at 1.8 million deliveries for electric vehicles. Total production was 494,000, and this is strong growth, 38% year-over-year growth. Last year's numbers, 1.37 million versus this year at 1.8 million. In terms of expectations, they were sitting around 477,000 for the last quarter, so very, very strong. They continued to beat, and they did need some good results. They had been struggling a little bit on the charts. They had not performed as well as the markets during the last year. And now as we push into next year, they're starting to deliver the Cybertruck. We'll see how that plays into their numbers going forward, but it's definitely going to help their profits over the longer term, in my opinion. And we'll take a look at how these results affected their charts later in the video. I also wanted to mention Apple did get downgraded by Barclays and they fell 4%. Absolutely a massive move for this very, very large company. They trimmed their price target by just $1, but reiterated that 160 range for Apple, and they are much higher than that. They also voiced lackluster demand for the iPhone 15, and they expect the same kind of sales for the iPhone 16 as well. So definitely some weakness here for the largest stock in the world, and if the largest stock is struggling, then we're going to see markets struggle at least a little bit. We also had CEO Tim Cook highlighting that the Apple services sector continues to have very good margins, and they are expecting better than expected growth, as they mentioned in their investor call, so that could be another driver for the company, and really only iPhone sales were mentioned in this downgrade. Moving over to the Fear and Greed Index, even with that big move down today, we are still in extreme greed, which is interesting. You can see that big step down here on the charts. Still have a long way to go to get to that 125 MA. Currently sitting down at 44.63. Current price 47.24. So quite a bit of room there if we get back to that 125 SMA. And then looking at stock price strength, breadth, and put call ratio, all still in extreme greed. Safe haven demand in fear. And then we got junk bond demand still in greed. So everything still says we've probably topped out, in my opinion, as I tend to use this as a contrarian metric. Moving over to seasonality, the beginning of the year is typically expected to be quite bullish, but we did see a very big move down. You can see first trading days are very strong for the NASDAQ, 18 of the last 26. And then we got a massive down day today. So just keep in mind that seasonality is the averages over the last several decades. Doesn't mean it's going to happen every time. And really, we don't see major negativity until the Thursday, the 18th. Everything until then is fairly bullish. Moving over to the economic calendar, pretty much everything was weak for the day. Eurozone manufacturing was above expectation, but well below that 50 mark. US global manufacturing also well below the 50 mark and below expectations. Atlanta Fed GDP below expectations. Not great here for markets. And then looking at Wednesday, we do have manufacturing PMI. JOLTS report tomorrow at 10 o'clock. That is obviously going to affect markets. If that comes out weak, that could be bullish for markets. Maybe we see the Fed be a little bit more dovish than what they said. And then we also have Fed minutes at 1400. That could absolutely push markets around as well. If there's anything about cuts in there, we could see a very bullish market. They are not talking about cuts. Right now we're extrapolating off the dot plot, which is illustrating 3 cuts for this year. But this could give us a little bit more knowledge on what they actually said. So big data for tomorrow. We'll see how that plays out. Moving over to Max Payne, currently sitting at 471, stock price almost down to that level, 472.75. Total options just under a million, put call ratio sitting in that 1 to 1.1 range. Massive call wall at 480. Next call wall 476. Expect to close well below those. You can see we're right in this range here between 469 and 474. Could get even weaker if we fall to the bottom of the calls. 467, maybe all the way down to 462.50. That'd be a pretty big move. I don't think we'll do that all this week, but just understand that the call walls are definitely pushing us to the downside, and we'll take a look at that on the charts. Starting off with the S&Ps here on the hourly chart, you can see we did get another big leg down. Most of that came in the pre-market, so it did look like a gap down. Ended up 0.56 to the downside. Touched my next level at 470.80. Had a pretty decent rally into the end of the session, which is interesting, on big volume as well. Momentum ticking back towards bullish. But in the short term, we are definitely bearish. You can see the EMAs are stacked, 9, 21, 55 EMA. The 144 is between the 21 and the 55, so that's a little bit mixed. But on the shorter term, EMA is definitely bearish on the hourly charts. You can see bearish momentum on the daily chart as well. Still watching this head and shoulders formation, left shoulder head pulling back right now into that neckline. We'll see if that holds around 468.40, if we end up getting a right shoulder or not, or if this just ends up going right through that level. I would expect that 21 EMA on the daily chart to hold, which is at 467.70. Otherwise, everything still looks bearish except for that pretty strong bull candle at the end of the day. Might see a little bit more rally early in the session tomorrow, and then I would expect this eventually to be met with sellers around that trend line or even all the way up at 474.78. Moving over to the NASDAQ, similar thesis, but much bigger down day. You can see that huge fall throughout the session, down 1.69%, big bearish candles. It is worth mentioning that these bounces were pretty aggressive. You can see, came in here, took out my level, not a major turning point for me, but then it rallied right through my next one up to that 55 EMA, came down, broke that level again, retested it here, broke down right to the next one, and then I did expect this to hold. I did not think it would rally this aggressively up to that 403 area once again, right at the end of the session. It is worth noting, though, we did test the 21 EMA as well as VWAP on the daily chart, so still bearish momentum, still strong volume on that down day. But look at this volume at the end of the session on the hourly chart, stronger than all of the candles throughout the day, and it was basically straight up. We went from 400 all the way up to almost 403. We did come up a little bit short of my level, but you do have to respect that. We could absolutely see a little bit of an overthrow from that level. This was a new low on this candle. Let's go ahead and extend out that trend line. It's right in that same vicinity, really watching those EMAs in that zone. So for tomorrow, watching to see if we break above that 403 area, if we can get a change of trend on any of these shorter time frames. Let's go ahead and look at the hourly chart. Basically the same thesis as the S&Ps, 9, 21, 55 EMAs all stacked, 144 in the middle, as well as the 200 SMA on the hourly chart. Does seem like we could get a rally up to that 21 up at 406. Again, strong volume on the last hour of the day, momentum ticking towards bullish. Do have to respect that as we go into tomorrow's open. Moving over to the Russell and the Dow on the 4-hour charts. You can see the Russell did move lower in the pre-market, recouped all of those losses in the mid-session, actually turned bullish on the day for a little bit, tested that 9 EMA on the 4-hour, broke back down to the 55 EMA, and now you can see we're consolidating in that range between the 9 and 55 EMAs on the 4-hour chart. Also tested my trend and horizontal support at 198.75 and 199.21. Technically held that level, so you could argue that this is still a head and shoulders. Left shoulder, head, right shoulder potentially. We didn't get all the way down to the neckline, so this could break a little bit lower, then rally or hold this zone and be a little bit off kilter. We'll see how that plays out. Right now, looks like a consolidation after a bigger move down. Still bearish on the day. And just looking at that on the daily chart for a little bit, you can see it was 0.58 to the downside. Bearish momentum, bearish RSI. 21 EMA sitting all the way down at 194.49. And then looking at the Dow, you can see through a big wick to the upside. Looked at pretty bullish in the early session, all the way up to 380.50. Lost all of that move, sold off down to 374.69. Rallied up, ended up basically flat on the session. Still holding 376.35, which was the wick high from Wednesday the 20th. So Dow basically sideways, still holding its gains. Everything else was bearish. Moving over to Apple and Tesla, you can see that absolutely massive move down here for Apple. 3.58% on the day, and you can see that massive gap. That gap alone was 2.75%, so massive move on the gap, touched the 144 EMA, held that level a little bit, down a little bit after hours, big bearish momentum, big bearish RSI, massive volume on that. Everything looks very weak here for Apple, and this is going to be a little bit tough to play here, right? So you don't know exactly what's going to happen. We've had a massive sell-off. I would expect follow through down to the 200 at 179.64, but that doesn't mean get bearish right away. We did have a massive move down, found a little bit of support. Let's go ahead and look on the hourly chart. Yeah, basically straight down throughout the session, 0.8% on that last candle of the day. You can see momentum rolling a little bit higher into the end of the session. So you do have to look at that a little bit, but really everything is bearish. You can see all the EMAs and SMAs stacked on top of each other. That is not a good sign here for Apple. And then looking at Tesla, 0.02 to the downside. continues to find support in that grouping of EMAs and SMAs right in this 247.69 area, as well as my shorter term level going back to this consolidation at 246.35. So continues to hold that zone, bearish momentum, RSI neutral here. Looking at that on the hourly chart, not much to say. Consolidation did go higher on the news. You can see it. Couldn't hold those gains. Consolidated, basically flat on the day. Moving over to AMD and NVDA. Both of these cratered here today. Massive moves down. Look at these big bearish candles. Took out my first level at 144.93. Took out the 144 and 200 SMAs. Came to my next level, 138.94. Technically broke that, retesting it here. Look at that on the daily chart. You can see gap down and fell. Didn't quite hit the 21 EMA, but bearish momentum. RSI getting close to bearish. In terms of trend, still technically intact. This has been a massive runner and it does still look strong in terms of structure, but that bearish momentum is not great. And then you got NVIDIA also falling here today, so it does look like semis as a whole are falling. Look at that on the daily chart. You can see we had been at a double top or slightly lower high formation. Now we're falling off of that right at this low here from Wednesday, right at the 21 and VWAP. If those levels break here in that 480 level, you got 475 is the next one. And then realistically, you're looking at the 55 EMA at 465. And then my next level here, 461.76. So I expect this to break, move to that next area. And then if this breaks in terms of a structure, this is a high, lower high. You would expect that midpoint to break. And then that gives you a lot of room down to that 200 at 407.10. Moving over to staples and discretionaries, we continue to see massive rotation. Staples broke out well above these previous highs, well above my level, 72.50. Next level, $74. Go ahead and drop that to the daily chart. You can see what that looks like. Took out all the EMAs and SMAs. Zoom out a little bit. You can see we are above everything. Above 74, you got 75.40 in this previous consolidation going back to July. So staples looking strong, discretionaries looking weak, continues to break down, gapped through my short-term support, gapped below all the short-term EMAs as well. 174.76 is my next level, bearish momentum, bearish RSI, and you can see that strong volume on that down move. Moving over to energy and oil and gas, you can see bullish day for both of these. So you like to see it. Gapped up, tried to rally, couldn't quite hold it. It is back above this highly traded zone on oil and gas. Let's look at that on the daily charts. So inside candle, big wick to the upside, finding some support for sure. Momentum still rolling towards bearish, but RSI ticking towards bullish. A little bit of mixed signals there. I do expect this to be a higher low. You can see consolidation, dip low, rejection, rallied up, retesting, looking for this to break higher. And this is still looking like it's going to do it in my opinion. And then you can see similar thesis here on energy, consolidation, dip, rally through, consolidation, waiting for this to break higher. It did push higher here today. You can see on the daily charts, pretty solid, 1.07% to the upside, but it did hit some of these downtrend lines in the short term. Couldn't hold those gains. Otherwise, we would have been closer to 2% on the day if we had closed around the highs. It does kind of look like a flag type setup, but really you want to see this break higher. It is above 84.56, so you got to respect that breakout as well as the 200 SMA, but realistically we're in the same consolidation that we were going back to November, and I want to see it break above those highs, above 85.50, and then look to 87.37. Moving over to utilities and healthcare, basically everything is rotating into safer stocks. So utilities had a big day, 1.45%, sitting right at the 200. That is obviously going to be an area of resistance, but momentum says we can break through it. RSI looks like we're going to break through it. Next level would be $65, above that $65.75. And I do think we're going to see that breakout either tomorrow or the next day. Healthcare also breaking out very, very strong. You can see this longer term trend line, tested it here mid-December, pulled back pretty strongly down to the 21 EMA, held there, rallied up, making new highs, clearly breaking out above all of these previous consolidations. You can see we're into these longer term levels going back to December of 21, April of 22, and then here in December of 22. So we could absolutely find rejection here, but this is strong, massive volume. Look at that volume spike on today's candle, big move up, 1.76 on healthcare. Moving over to breadth, 20-day average was down slightly, 0.72%, but still in the same consolidation range. Momentum and RSI not telling us much of anything. 50-day breadth on the weekly chart, bullish, still in the same range. We did get all the way up to 92.44 at one point, so our high was above my level at 92.25. We did wick that level here today. Last time we touched that level was the November of 22 peak, and then obviously we saw massive pullbacks from that level. So Understand we are at peak breadth in my opinion. The last time we saw any levels above this is going back to June of 20. We are at critical levels here for breadth. Moving over to yields, 2-year and 10-year both had bullish days. 2-year 1.7% higher, coming off of my level at 4.26. Up to almost 4 1/3. 10-year also having a decent move higher, 1.78%. Did wick up to that 4% level in the 21 EMA. So momentum bullish on both of these. RSI looking towards bullish. I've talked about this several times. I think yields have oversold at least a little bit. We're starting to see that curl up. We've seen this before. You can see here at the beginning of December, we had a little bit of a push higher. Also here at the end of November, we had some pushes higher. So could be a little bit of a retrace. This is the first test of the 21 EMA since we've broken through it all the way back here at the beginning of November. So there's definitely a little bit of strength down at 3 3/4 up to 4%. And we'll see what happens here if we're going to break higher, if we're just going to consolidate sideways in this zone. Moving over to the dollar on the hourly and the weekly, you can see hourly chart, massive push higher. Continued the rally, took out all the EMAs well above them on the hourly chart, took out my 102 level, took out this trend line. Everything looks good. Next level for me up around 103 on the hourly chart. Momentum fading a little bit towards the end of the session. But look at this on the weekly chart. We got that first step towards bullish momentum. We'd been stepping down all the way back since 16 October to current levels. We've been seeing that market fall. Sure enough, we got a step higher here. We'll see if that has any follow through. Look at that on the daily chart just for a moment. You can see we had been grinding a little bit higher, held that 101.25 level, and then we broke through these zones. 21 EMA sitting at 102.47, but a little bit of dollar strength coming through here. We've seen some pullbacks like this, but this seems to have a little bit more strength to it, especially with that weekly chart stepping towards bullish for the first time in a couple of months. Moving over to bonds, both of these looked weak here today. J&K gap down, held this trend line, but I would expect that to break. Bearish momentum, RSI looking like it's going to continue lower here. TLT on the weekly got a gap down, but really I want to highlight momentum. Currently at a step down. Obviously, we have to wait and see how this closes for the week. This is not great. Clear area of rejection at that 55 EMA. Currently trading at 98.89. Let's look at that on the daily charts. Similar to TLT, 3 bearish days in a row. It's at these previous lows. And if that continues to break here, you got the 21 and the 200 is sitting at 97.20. I would expect it to continue to move lower here. Momentum bearish, RSI sloping down for sure, looking towards that 50 mark. Seems like yields are going higher and bonds are going lower, at least in the short term. Moving over to volatility, move index spiked up massively. Makes sense. Bonds are selling off, yields are going higher, and you can actually see a low, higher low, big breakout. And then looking at the VIX, big gap higher, big wicks up to this 14 area. Couldn't get above the trend line on a closing basis, which is interesting, but bullish momentum, bullish RSI. I would expect this to continue higher, at least for a few days. Finishing up with my accounts, I did protect myself pretty well. You can see I was down a few $100s, but the NASDAQ was down almost $7 on the day, so massive down move there. I did roll down and in on my calls, so down to 188, rolled in one strike, and in about a week, so that gives me another opportunity in a couple of weeks to start playing some shorter term calls. Right now, still protecting myself a lot on the IWM. And then looking at the Qs, similar thesis. I did move in and out of my shares a little bit. Not sure if that was smart. We'll see how that one plays out tomorrow. I did leave them on because of that end of day rally that we had. And then I do have a put for tomorrow like I usually do at the money at 402 for 95 cents. And then similarly on my calls, I did roll these down and in 397 for $14. And 402 here for $11. And those did protect me pretty well on the original positions, and then rolling them in also protected me as well. So you can see those are already in profits with the roll in and down. And then XLE, I did roll this up as well, up to $85. For 67 cents. The original position was profitable, but this one's down a few dollars. I do expect energy to continue higher. In terms of my profit graph, you can see my break-even point here to the downside is just below 390. So that does give me quite a bit of room, about $10 to the downside over the next month or so. And then if we do see a rally all the way up to 422 is where I start to get a little bit concerned. Obviously, that is the expiration value. In terms of deltas, a little bit bullish would be okay for me going into tomorrow's session because of that short dated put. If we see any weakness, that 400 level is going to be pretty important. I'll definitely start taking off bullish positions if we break below that. Let me know down in the comment section what you think of Tesla's deliveries and where is the stock going from here. Is it going to break out once again, or is it stuck in this current consolidation? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.